WEEK.IS, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at what happened in the market during the previous week and try to learn something from it and plan for a better trade for the upcoming week. And this analysis is for April 3rd, 2023, Monday, the week beginning of that trade. Here we go. Let's get into the charts first. This is the weekly charts that you're seeing. Look at this. Wide range bullish candle. Nifty. Banknifty right side. Wide range bullish candle. And it's a tri-star. 3-star candlestick pattern of a morning star. Considering this is a small body. This is a small body. So a gap down happened with a small body and a gap up happened with a small body. So it's more evident on the Banknifty. So clear bullishness evident on the weekly charts. Remember, we had been talking about this support zone, which is a previous resistance zone from where market moved out, and it could act as a bounce area, and that's what happened. We'll see that in detail later. So this is the daily charts that you're seeing. The Nifty showing a wide range bullish candle on Friday after a gap up, a very wide gap up, leaving behind a gap there as a support. And Banknifty also wide range bullish candle for 2 days consecutively, and that too with a gap. So it's a pro gap, it's a bullish kicker on the daily charts of both the indices. Clear bullishness evident there. Orange bands have turned into sideways. Consolidation, contraction has begun, and it is a bullish bias because of the close above the 20 DMA, which is the median of the Bollinger Bands. Let's summarize and get the numbers. 419 points, that's 2.5% up on Nifty, and 1,221 points, that's 3% up on a week-to-week basis on the Banknifty. So wide range, it's a morning star pattern. We had seen that tri-star on the bottom reversal from a support zone. So it's still below the 20 and 50 DMA on the Nifty, and Banknifty still below the 20 weekly moving average. And we know that there has been more than 11% and 12.5% respectively on the indices. Correction has happened, and we might have found a bottom, and then there's a bounce that's in progress, and we retested and it bounced up. That's exactly what happened on both indices. And Nifty in the daily time frames has gained 279 points on a single day Friday. It's a bullish kicker, wide range bullish candle. Both indices same. 698 points on a single day in Banknifty. Big jump up in the Banknifty that has happened, and it is closed above. Both indices are now closed above the 200 exponential moving average daily, and the 20 exponential moving average also, and the Fibonacci 38 is where the support is now. So lower low, lower high pattern is still valid on the short term charts. It is not proper. It will get negated only at 17,800 and 41,671. So levels to watch on the outside is 16,750. Major support 16,650, gap closed by. And similarly in Banknifty 38,613 and 37,386 previously closed on side. Bollinger Bands, as we said, it's a sideways consolidation also indicative, and there is a volatility divergence that you can see where the price has moved outside of the bands and forming a W pattern with another swing low of the W inside the Bollinger Bands. If you're not aware of this, please check the playlist, and it's a possibility that this W pattern can break out and move further up. So on the daily charts, volatility divergence, we have been talking about that since long. Right, so all bullishness clearly evident. What else we can make? This is another view on the. This is the same descending wedge trend line from where we had made a previous all-time high months back, and then could not hold on there and then fall down. Same Banknifty also rounding pattern trend line. So we are still below that trend line. And let's look at the support resistance levels. See here, we managed to close above the 200 DEMA exponential moving average. It's beautifully taking support of the 20 and closing above the 200 DEMA. So the first resistance upside, of course, would be the 50 moving average and the 100 moving average yellow, and this the violet and this yellow. So it was 17,478 zone, and after that 17,600 zones, and in between you have a gap at 17,573. So 17,500, 475 and 600, that's a zone where a cluster of resistances, confluence of resistances are there. And once that is clear, then it has the major crucial 17,800, which is a previous swing high, and that would negate the lower low, lower high pattern that is forming only if it clears and goes above 17,800. These are the resistance loops. And after that you have the 18,000. Likewise, downside, the first support will be the 20 moving average. Before that, 200-day exponential moving average, then 20-day exponential moving average. Then you have a gap that is formed on Friday. That's 17,259 has got a gap support, and you have 7,200 supports. 300 is there support. A lot of supports on set. And then 7,200, 7,126, 17,000 rounding number, and 16,950 Fibonacci zones at 17,750 and 17,650 downside, right? So we have Fibonacci 61 supports here, we have Fibonacci 50 support here, we have Fibonacci 38 above which we are close now, right? So that's how support resistance. The Banknifty, similarly, we are in a descending wedge. We made a bottom here at 30. Near the zone of 38,642, right? So let's look at the resistance. The resistance first would be the 100-day EMA 47.63. Then gap is coming at 41,208. Then you have the 41,670 in previous swing high. Then you have the budget high 42,1564. The 42,000 is going to be crucial because it's a budget high, it's a previous swing high, and also it is breaking out of the lower low, lower high pattern, where that will get negated from there on. So 42,000 is the crucial resistance upside for the bulls, but intermediate levels we have seen. Downside with the gap support at 40,200 zones, which is that was a good support. Then you have 40,000 nearby zones, then 39,759, 39,419, 39,26, 38,977, 38,642. So Fibonacci 50. So we are right now above Fibonacci 61, 50, 38, right? And all the hurdle in front starts with moving average, exponential moving average, that's 40,800 nearby zones, right? Just close above the 50 now. So that's resistance supports onto the bank that we will about. Now take a look at the momentum and the trend of the Nifty and the bank. The weekly is what you see on the left side for the Nifty, right side, and Nifty. So basically the weekly charts on the left side and daily charts on the right side. So Nifty weekly momentum has taken a bounce and rising up. Momentum on the weekly Bank Nifty taking a bounce and rising up. Momentum on the weekly is rising up sideways. So overall momentum is clearly sideways on the medium term and the short term, both indices. How about the trend indicator ATX that you're seeing here? So trend indicator remains bearish in the weekly or the medium term charts on both indices, right? And trend indicators ADX has crossed over into the bullish zones for the short term on both the indices, right? But it's not having enough strength. Let's look at this, right? Not having enough strength yet. So next week it will be clear. That's a summary of how the trend is moving. So volatility is the next thing that we are analyzing. It's in we are doing it with the help of index, the India VIX, which is cooled off 15.5% of cool off from the near 15 plus levels. Now we are back to 13 levels, 12.93, which is good cool off which happened. So wherever the VIX is at the down and a support zone, there is a chance that it may roll its back. So be careful, cautious on that. But it is good thing that the VIX has cooled off. The fear is less in the market. Look at the open interest data. We can see that it's a short covering build-up that has happened, right? It's a short covering on both the indices on the futures high, which is a short covering is where people who are going short or covering and then going long instead. So that can be very powerful sometimes, right? A lot of reversal would happen and then it can be big up move further that can be expected. So that's what happened on Friday. Futures high, open interest. So for the April 6th weekly expiry of 2023 options data, what does it say? The put call ratio is 1.29, 1.26 on Nifty. Both are clearly bullish. So option interest clearly in options and futures both in favor of bulls. VIX cooled off 15.5% and below, and back to the lower regime of the VIX volatility. So this is good. You can see the highest put rating is what is dominating about the charts on the Nifty and the Banknifty right side. So puts are more, so this market is clearly bullish. And unwinding of the calls can be seen at on both the indices, you can see. So for the April 6th options expiry, the Nifty levels are 17,000, 17,700. That's where the highest put and call writing is seen. That's where the highest support and resistance can be foreseen. 17,300 and 17,500 is the second level of highest put and call writing, and 40,500 and 40,000. That's the same place. It's that's where the highest put and call writing. So 40,500 is very crucial, right? Because writers are seeing maximum support and maximum resistance at the same zone. 40,000 and 40,000. 42,000 is the second level where the highest put and call writing is seen. Right. This is 4 or 5 days before the expiry. Still have many days, but next week is a truncated week, so you have 1 day less, so this can be more accurate. And decay will be fast. So that's what open interest and that I showing, right? So just to summarize, everything is in favor of the bulls. Support levels, Bollinger Bands, price action, open interest, momentum, trend, right? Weeks, everything. Price action, option writing, open interest build up, everything is in favor of the bulls as of now, suddenly, right? Look at how the sectors, industrial sector, major industrial sectors like 6 or 7 we are considering. So if you see the IT sector has moved up 2.75, metal has moved up 2.4%, auto has moved up 1.1, pharma has moved up 2.2, FMCG has moved up 2%, realty has moved up 1.75. So clear up move on all the sectors across the sectors. Now the only sector that's clearly bullish and both the time frame is FMCG, right? And others are all climbed back on the sideways and maintaining the sideways momentum, right? So you don't wait before taking long positions, but probably you can try that out and tight stop loss in the FMCG to begin with. Next week you'll get more clarity on how the momentum is improving. Look at the charts are the same. IT sector charts, very close to support zone in a parallel channel. Momentum is still in the sideways in the medium term. Metal momentum sideways, climbed to the sideways, and yeah, it has corrected a lot. Metal, auto, it's a neckline, breakout zone, shown a green, taking a supported momentum. Pharma had fallen to the bear zones, climbed back to the sideways with a solid green candle reversal. FMCG still bullish and most bullish with both time frames showing great momentum. Trend also is bullish. Reality showing at the neckline consolidation and a clean close, taking a support of the momentum RSI 40 as well. The next analysis would be on the index KV, which we're considering the top 5 basically. Critic stocks, what they call the HDFC Bank, consolidating. Momentum slipped in sideways but rising now. Solid comeback, solid wide range bullish candle, cross out of the momentum of the victim. So it's in a bear zones and it has never gone too bad since several months now. Right? It's consolidating in the same zone. So not only in the bullish zones, but not giving up the flag and ball pattern yet. But sideways momentum and then bullish weekly move with rising momentum. HDFC also is consolidating in that range, maintaining the sideways. Less interest has made the big comeback after it has been moving in a zigzag up and down fashion and consolidating since long time. We almost breached the neckline, but took a support at that solid black line that's seen there and climbed back from the bearish momentum to the sideways momentum. So Reliance did a big comeback last week. IT stocks Infi has been consolidating, took a support, climbed back the momentum into the sideways. TCS also climbed back and retained the momentum sideways in the short term and medium term, and with a solid bullish candle over the last week. ICICI Bank also has down. 2 weeks of comeback. Momentum is rising up. Trend is about a crossover in the medium term. Solid green white bullish candle. Bank has been doing this up and down since several years now, but it had a bullish divergence and walked out, and then it's not ready to breach that bottom. Right? It's in a range bound for several months or years now. That's what's happening. That's about index heavyweight. So, in a nutshell, across the sectoral improvement of the momentum has happened, and comeback of banking stocks and the IT stock is what you see in the sector, in the heavyweight stocks. Heavyweights are those stocks which is contributing most to the index. Moving ahead, how did the institutional participation last? It ended up, they ended up as buyers on their Fyers and DIs. 2240 crores of buying the cash, and DIs also about 495. So net green. Derivatives like longs are also moved up. So institutions are back on the support mode. Along with persist is something else, because the entire March have had the FIs selling continuous except for the last couple of days, and then another couple of days in between when the other stocks got bought. So otherwise it was all selling entire. So institutional participation trending to green is optimistic, and it's good news for the bulls. We need the institutions, especially the foreign institutions, come back for the market to move up real. As long as they're sellers, it's almost impossible to move up. The market cannot move. It will be range bound. Moving ahead, now we analyze the global markets and the commodities and the currencies. Let's begin with the currencies. The dollar, gold of some more 0.5% down, and it's a 12% of correction now, and it's 102.59. And so cup and handle, basically you can see that the handle is falling down. Right? It's making up and handle pattern. It's basically bullish in nature, unless it turns out to be something else in the chat pattern. So, but all dollar is moving down. But look at the rupee. The USD INR currency pair is down only 0.2% down. And so 82.4, still maintaining at 82. Still rupees are the weakest, but it has climbed back with the sideways zones. Remember, it is very close to the all-time high levels, and you'll have to keep a close watch at where it's going to break. Is it going to break out on the upside or break down on the upside? Right. As of now, some gain in the rupee you can see, but rupee still at the weak points. Crude oil had a good comeback. 2 weeks of big bounce up from the bottom of the barrel channel with the bullish divergence that has worked out on the momentum side. And this is worrying, but as long as it's maintaining the levels below the 100, it should be okay for our economy at least. So crude oil 9% up in the cycle, because 75.7 is what we are. So it just climbed back to the sideways zone, but still it's a relief as I said earlier. Let's look at the gold. Gold was the hedging instrument. You can see that it did a big comeback. It's a 20% kind of move. Yeah, 20% kind of move, and attempted to make a new all-time high, but seems to have failed for the third or fourth time in the last 2 years after the COVID, and then hit the resistance at 2011, which is just 60 points, 70 points away from the all-time high. Once again, it may be descending towards the bottom of the parallel channel, right? So that's the hedging instrument gold. Probably giving up after an attempt to break out when the markets, entire global markets were down. People shifted the money to the gold now. The markets are out, people shifting the money back from gold. That's what's happening. So gold went 5% down, hit the resistance, and after 20% correction, not correction, 20% up move, rally. Now, looking at the US markets, we're analyzing the Dow Jones, S&P 500 and Nasdaq. All three of them are 3% up. Green, good back. Momentum is in sideways and it's rising up, and it's almost trying to break out of the descending wedge. Right? This is the wedge, and it is Dow Jones is having a solid wide range bullish candle with the momentum rising, moderate bullish. And look at this, Nasdaq has almost broken out of the descending wedge, and the major resistance zone is taken out. Is it a breakout? That's what we have to keep close watch. Momentum is still in the sideways almost all. Nasdaq has just climbed into the bullish zones, but S&P 500 down here also is showing a breakout of the descending wedge, but momentum is still sideways. So overall, sideways rising up and breakout from the descending wedge is what you can see. Seeing there will it happen. then that will be good for us as well, for Indian markets as well, basically. Two short wicks, both the long side, that means cement, it's having a rounded pattern, can be reasonable risk reward towards the all-time high trail, and then keep the entry candle as bottom as the low as the stop loss on this. Also climb to the bull zones. Trend is also closed out to the bull zones on the medium term and the short term as well. All of the electronics has a cup and handle breakout, rounding pattern breakout that has happened, then consolidation again broke out. Now it is in a parallel channel and then showing a solid green comeback, and it's taken a support of the RSI 40 and then rising up, bouncing up. So it's clear bullishness that you can see. With tight stop losses, you can have expect a move up to 140 at least, the previous all-time high. That could be good risk reward. Have tight stop losses though. Okay, but the tone is low, there will be a cement low. Another actionable for the next week is the payoff chart that you see here is for the Nifty. It's a double diagonal calendar spread, which is where you sell the next month's put and call rate and have 4 month put and call as hedge portions taken. It gives a very reasonable risk reward, good probability of profit, and risk reward may not seem very attractive if you're holding on to the end. Exit 1 or 2%, come out of it, and do consistently do the same thing every week. So look at the range. You're getting a range of 600 points, right? And yeah, you can do the roll up and roll down or risk off or risk on, whatever. All the techniques of adjustments can be done in case there is a breach that happens. But looking at the levels and the levels range that we are getting, it's less like market may face resistance near the 15600 nearby zones, and then it will fall within, as long as non-directional strategies, or as long as it is within the range, you make money, right? So it's another actionable Nifty options trading strategy, double diagonal calendar spread. Let's just wrap up all of this analysis. Finally we saw green after 3 weeks of decline and after nearly 11 to 12% of correction that has happened from the previous swing high. 3 weeks continuous decline, and we finally see a bullish morning star reversal signal is what we're getting. Momentum has improved substantially, and it has climbed back to the sideways, and then Bollinger Bands also indicates a halt in the expansion, the downside, temporarily or permanent. We don't know unless the price action tells us that. Momentum trend, Bollinger Bands, weeks, operators, put call ratio, all of this in favor of the bulls for sure. Use indices also attempt to break out of the red, so that they'll do it or not. We'll have to keep a close watch. VIX is cool off 15% in a week, and then it's just showing some buying interest. So my view for the next week is buy bullish. Now, what's in favor of the bears? We still have a lower high pattern. Short negated and will cross 7800. Now we still have the gap resistance upside. Gaps are very powerful. 50-100 moving averages are also resistance zones. Right now it's right below there. Exactly hit on the 200 DME and just climbed to manage to close above that. So the price action is well within the channel. Channel in the Nifty and the wedge. It has not shown a clear breakout yet, but definite reversal and definite attempt to come back that is there, but it is still not broken out. It's still below the previous breakout zone from where we make the previous all-time high. It's still fallen below it. Unless it climbs that and the price action turns in favor in the short term, we still cannot be sure whether the BS will take over once again or not, right? So the global inflation, interest rate, RBI policy is there next week, and all these uncertainties are there. There's a truncated week after next week. So a lot of things out of action in a small week. That's what may happen next week. So crude is good, but crude is spiking up actually. It's a worry, but still it should have been okay. But rupees still very weak. So these are all the concerns. So VIX is in the bottom. Once having pulled back to the bottom, so it could mean lower and spike back again. So possibility is there. So you have to be cautious on that. Levels was the 16,650, 36,800 on the downside, 17,800 and 48,000 on the upside, medium term. Right? Other levels and support resistance we clearly analyzed that earlier with the help of the operators as well as the support resistance levels in the charts. Right? And just to summarize, if the market is crashing, there's opportunities for you to invest in a SIP mode. You can make use of the option strategies to do that as well. Check out the playlist of option strategies like covered calls and vertical rental incomes, and then cash cycle puts where you can invest in a systematic way. All the strategies are there already. You can do that, and always have hedge portions. Have defined, either use different spreads where the risk is defined, and then or we can go for non-direction strategies if your direction is not clear but you have a range. But always make sure that you have hedge portions so that get the margin benefit. At the same time, more importantly, your capital is protected. You're still in the game the next day, even in the case of a black swan or a big outright surprise risk comes in. That's my view. My view is for the next week. If you end up watching this and not subscribe, please subscribe and share to your friends and colleagues. We have very solutions and appreciate your help in this regard. And if you already subscribed, please like if you like it and comment and share to your friends. Right? If you're interested in the Telegram services, click on the description link and then you can get that as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.